This video is there to just level the fields a bit in terms of getting realistic when entering the world of trading. There are a lot of temptations on the internet which overhype trading and promise the world, and ultimately leave the unsuspecting victims in losses. And I guess there's a side to most of us that really is connected to this snapshot that we are after and get married to this fantasy that we want for ourselves and see that existing in the world of trading, and therefore buy into this mechanism to get us to that. Now, because of that snapshot that we are so eager to get towards, it makes this vulnerable side to us susceptible to getting scammed or to running into losses really quickly. All right, so that's why I tell my guys that you need to drop your attachment to outcome. Stop falling in love with the fantasy and rather fall in love with the process. All right, so when you're getting into the world of trading, there is a ton of people who are entering without the protection that they need, because they're obviously still really excited about this and don't want to see the bad side. So this is a video to chat more about the bad side, not everything, just some points, and I guess what to do with that as well. Gambling is something I don't do and I'm not a fan of. And I don't go to casinos, and I don't do online gambling or sports betting or anything to that effect. I just don't find joy in it. As when I was in primary school, I went to a fun fair and I just saw the money that I had for the day disappear on this game. And I remember after that, I never want to feel that again. And thankfully, since then, I've never been interested in betting or gambling. However, after a good period of time with trading, I came to realize that trading and gambling, or trading, gambling, investing, whatever mechanism requires of faith in the future, like there is this common thread that exists between that style of making money, where if you mess up once or a few times or unnecessarily, or if you mess up in just by being kind of like silly, there's this hole that is created, which is a massive problem, especially for the, I guess, I don't, not to be sexist, but the male archetype, because once you made that loss, that hole is a punch to the ego. So when we take on a loss, there is this deficit that is immediately created. And when there is a hole, that hole can grow into a void. And people, because it's not visible and you can hide it easily around your family and to yourself, that hole becomes really dangerous to what could be a really great thing. All right, so again, I don't support gambling. There is a ton of guys who do poker and that sort of thing and made a life from it, but that's not for me. Trading is my game, and I've managed success of this, but it can be easily taken away at any time, even for me, if I fall into this delusion of deficit. Now, it's very easy to say, well, you know, you can just shake it off after a loss and move on. But in truth, life has got its ups and downs. You're not always going to be on your front foot. There are times where you're going to feel exhausted, a bit wobbly, and open to vulnerability, mental vulnerability, which is another point I'll chat to a bit later on. And after a loss or a hole has been created, it feels as if you can immediately rectify it, as if you are in the real world where you've stumped your toe and perhaps you can, I don't know, put a plaster on it or take a painkiller or something. Like, it feels as if a loss can be immediately rectified, where in truth it isn't, because the market often isn't actually tradable, and I'll talk about that later on as well. For us poor males who've got ego and pride and, you know, what we've been groomed to accept as normal, which is also psychological warfare, and that's another topic for another time. We then think if we just spend more money, spend more time, and keep on throwing good money at bad, that we're going to fix this hole. Which, by nature of design, that hole will just become bigger and bigger and bigger. And even if there are some small wins along the way, we still become ashamed, feeling guilty. And from there, this self-destruction habit is born. When it comes to trading, investing, I mean, even property, whatever is reliant on the future rather than the now moment, whatever line of business that is in, where a deficit can create this void within you, within your pride, within your ego, within your life, this silent killer that no one sees, that has the power to grow to a point where it could ruin your life. And I don't want to be doom and gloom. I just want to get real with this. And I've had guys from around the world, so it's not limited to culture, come to me and say, dude, I believed in X, Y, and Z product. I put whatever it was, 10 Bitcoin at the time, or $30,000, or my last amount of money, or the borrowed amount of money, or my overdraft, or my second mortgage into the markets just to get ahead in life, because I'm so tired of the rat race that I'm constantly in, and it's all gone. And I don't know what to I don't know what to say to my business partner. I don't know what to say to my wife or my spouse. I don't know how I'm going to bounce back from this. And then they get into the state of serious desperation, where they can either land up committing a serious crime or do something weak, like committing suicide or something like that, leaving their family behind and all that sort of thing. So it's no joke, this environment. So I want you to be aware that when you enter the world of trading, there are ways which we'll talk about now in which you won't necessarily, if I'm looking down, by the way, I've got some notes, and so I don't miss out on any points. There are ways in which you are able to curve this. All right, so it's super important as you get yourself settled in on this journey, and or alternatively, if you've been here for a while, just to align yourself to this, to realize that the addiction of this world of instant money and that sort of thing can be quite detrimental to you if you're on the wrong side of it. All right. Oh, and one thing before I continue that you got to realize is there is no such thing as win that money back quick. I want to repeat that because it's quite a very solid hitting point. There is no such thing as winning that money back quick. I've had 6 years of trading experience, and I'm talking from a ton of experience when I say that. Revenge trading and all that stuff you know you shouldn't do, don't do. You got to find a way to not negotiate with yourself and not become subservient to your emotions when you feel this hole come up. All right, so the enemy is this hole. All right, the enemy is not the market. The enemy is not people on the other side of the world buying, selling. They're not the enemy. All right, the enemy is your pride and your ego. It's best that you know about this now and get on top of it before it becomes a problem ever. Because let me tell you, on the other side of it, there is a lot of greatness that can be experienced from this field. All right, so moving on from this hole. All right. Another thing that I want to talk about that could bring you into the dark place is mental fatigue. When you're on the charts, there are various factors that are against you. They sound silly, but when you are doing the same thing for hours, it hurts eventually. I'm a kind of person who likes to push forward. Being in South Africa in particular, things are wild. in certain regards. So I've learned to bring my game to most things in life and just push through the challenges. So whenever I feel limitation, I'll react to that by pushing harder in the other direction. This is not the best way to approach my trading day, all right? Because when I got into the world of trading, I didn't do it so that I would be at the laptop all day. I did it for time freedom and various other freedoms. So by sitting here for 11 hours a day watching the market, in fact, that's my definition of losing. Instead, before I continue there on that point, the kind of things that could create mental fatigue and general fatigue is the light on your eyes. All right, the blue ray that's coming off of your screens will make you tired. And do TED Talks and Google and backup information on this topic if you like. The bottom line is that the blue rays will make you tired. So I've got blue ray protection glasses. These aren't reading glasses. This is my backup here because my kids are quite creative little creatures. So I've got 2 sets of blue ray glasses that I'll wear in front of the screens. Actually, I'll even wear them when I'm watching the series or movie that my wife has selected for us whilst we have some downtime together. So please be aware of that as a factor of creating fatigue. Sitting down for too long in the same space can create fatigue. Being slouched over, shallow breathing can create fatigue. Not having enough water, I've got one of these bad boys, can create fatigue. Traders' fatigue from a physical aspect is there by design because you are focusing in this realm of this trading world where numbers are going up and down and your profits going up and down with it, right? So that's just your one set of challenges. The other set of challenges is, of course, being in a trade and having to be patient whilst the trade is warming up, or having to deal with the internal dialogue on whether or not you did the right thing by getting in on that trade, or seeing how you react emotionally to what happens if, for example, the trade is not working out and it might flip to the wrong direction and you start seeing your account get less or your position start to get less or you're being liquidated or having a stop loss hit. These are really triggering factors that are going to get you closer towards the hole, all right, the void. Factors that you need to consider if you're going to take trading seriously. All right, it's not all tens of $1,000s profit a day, which is possible, but it's not just that. It's the other contributing factors that you need to overcome within yourself to get to that level and maintain. I mean, the consistency and persistence that it requires to maintain that level of dedication, of profit, of providing for your family is something that you can't just be good at for a few days. You got to start really developing a support structure around you to keep that in your best interest for the future. To get around trading or around fatigue, planning your day, as boring and as life-sucking as that sound, because I hate planning everything. I'm a spontaneous kind of person. I love adventure and I'm out there. So planning for me sucks. I hate the idea of a calendar. I hate the idea of preset meetings. I love to be in flow and ease and grace and fluidity. So planning sucks for me. And it's something that I'm not a fan of in a big way. So much so that it was one of the contributing factors to my leaving the rat race and obviously getting into this lifestyle instead. With that said, planning around the market, not your day, the market, is going to really help you win this environment as a full-time trader long term. This set of challenge, and this could be another whole topic, so I don't want to spend too much time here, but just very much over the top and above kind of the obvious. The tools within MTOPS will give you the amount of time it'll take until the next turning point or the next opportunity or whatever you need to be there for you to trade upon. I would recommend going a bit further than that with your planning as well and getting a plan first and foremost. Number one, get a plan. After that, start to get into the numbers and do some light math in terms of how many opportunities exist in the market on average per day. For me personally, because I'm a day trader and I work with more of a high frequency environment, I've identified there are 15 in-trend opportunities that exist inside my trade day, and they typically happen for me around half an hour to 40 minutes at a time. So if I've missed one, then I kind of know that I've got half an hour to do other things before getting back, and that's the kind of way I work. So start working on your own plan and then build around that as well. I don't want to be your health coach and that sort of thing, because there's enough of that out there, but do other things that work for you. Like I cycle my son, I don't drive him, I cycle him to school in the morning, and that's like a 10-kilometer cycle each morning. I've got gym rings that are hanging from trees outside so I can move my spine and my shoulder, and obviously I've got kids, so it's picking up and picking down, so it's a lot of like squatting and that kind of thing. So I'm active by default. And if you're not, find something that works for you. Because my wife is an internationally accredited yoga instructor, I've had the blessing of being around her and yoga. And I can tell you right now, after breaking through the 2-week barrier of being on the mat with her and doing yoga classes, the return on investment from my body aspect, peace of mind, clarity, flexibility, core strength, that kind of stuff, was exponential. So if you can do something like yoga, please do it. But most of the people that I recommend that to just will brush it off and won't. So find something that works for you. All right. So that's how to plan for your body to handle more of the fatigue that comes. And as I'm saying that, I'm aware that it sounds super weak. I mean, for example, yesterday there were guys clearing our garden and making it look good for us, and I'm happy to pay for people to do that. But the temperature was like 35 degrees Celsius, and instead of buying a motor for my lawnmower, I've got the blade one, which is only push, because I'm more carbon conscious and that sort of thing. So it's a push lawnmower, which is very sexy because the blades make the garden look really neat. But they had to go out in this 35 degrees Celsius temperature, and our garden's quite big, so they had to go back and forth and the other side of the house and the front of the house and all this sort of thing with this push motor in the heat. And at that moment I did the comparison, going like, they're working, I'm not working. I'm just sitting down at a screen making decisions, or sitting down on this chair making decisions on the screen with this little wiggling thing up and down. So what I do isn't work. So there is a part of me that goes, stop complaining, you're not really working. There's other guys, if you could just show they'll show you their hands, that's work. I mean, the bricklayers and that kind of stuff, that's intense. But being more realistic, it is fatigue generating, and this is going to bring you towards this hole that I keep on talking about. So plan for your well-being of your body. My recommendation is to hydrate, to try to get as much rest, to move your body, all the stuff you've been told a million times. It's a move towards your financial investment to do these things if you're going to do it. Okay, so there's that solution. Then in terms of planning on the market and looking at the screens, I suppose another physical thing, get your blue light glasses to stop the blue rays from blue lights from tiring out your eyes, and also work in line with the market to see where the next opportunity may or may not present itself. Like say for example over here, I've got these timers that will say what will happen within 1 hour. All right, so this went a lot deeper than I anticipated yesterday, but we've literally got tools over here where you drop a vertical ray and it'll say this is what happened 7 hours ago. Or if you want to drop another in terms of the future, the next opportunity will happen in 5 hours from now. Use your time wisely on the charts. All right, moving on back to the charts. Actually, time can be an enemy. All right, when you get into something, and this is what really rattled me yesterday. All right, so this first initial bit between here and there, I got into the trade or into the market around about here, But because it was such shallow market movement, what could have happened is that it could have easily just kind of turned to the upside. Now I knew it was going to go down, but man, I can tell you these hours, all right, I'm talking like what happens along here, like 12 hours or more to accomplish. So getting to the market at the wrong time over here, because I was just being a bit impatient, was a mental turmoil, because the pain that's created when you have an open trade and it's just moving so slowly to the side brings on all of these emotions and doubts, such as, am I right? All right, was I right? Am I right? Am I being an idiot? Did I miss something? And you just watch your money almost do nothing. And as it slightly gets less, you think this is it. Well, I thought this is it. It's going to go the other direction and I'm going to take on a loss, and that's going to start the spiral. So that is mental turmoil. And also, I suppose, whilst you're in these environments, what guys don't recognize is that because the market has to move up and down, the price action is going to buck in other direction. So it's either going to like move up really quickly and then like drop down and then move up and then go down. Like it goes up and down because that's what a market does. But when it goes against your entry and your position, especially when you've just recently opened up a trade, the psychological internal warfare, especially when leverage trading and so on, is traumatic. So if you're dealing with impatience and doubt and fear and uncertainty because you're leaning into I'm just trying to think of another word of saying bent over, like a polite way of saying bent over. If you are succumbing to time and impatience and that mental warfare, the best thing to do is to lean into the MTOPS rules. And the number one thing that's going to help you there with that is to ensure that you're working from a confirmed turning point. Now, as I made mention too, the market is by default going to go up and down. So by having the knowledge of that and working from a confirmed turning point, and of course trading in trend, you're going to avoid that hole in your stomach of, was I right? Now, the market has got a certain amount of time that it needs to make up for before it does something next. Every single time frame has got its own set of rules and obligations to the MTOPS sequential method, right? Whilst this happens, it's very important to find something better to do whilst your position is fulfilling its objective, right? Because if you sit and you watch the trade all day, time can really go against you, especially sideward moving time. And when price is slightly moving or rapidly moving against where you open the position to only dump back down or move in line with where you said it was going to go. You can be right, but being right ahead of time is almost the same as being wrong. All right. So time, if you can follow the rules with it, but follow the MTOPS rules by trading in trend and trading from a confirmed turning point and getting outside of a kill zone. Yes, that's what a point I wanted to actually make, was that the more time that you allow the price to get away from the initial turning point, the safer your money is going to be. These initial arcs over here, kill zone, as well as arc 1 over here, is a high risk spot, as energetically speaking, you're messing with the core gravity pull of that transition. So if that goes over here, don't worry about it. The bottom line is wait for price to move away from the turning point, at least past kill zone, and if you want, let it get past arc 1 as well. All right, so that's how you deal with time. I suppose moving on with the concept of time as well. Once you've opened a position, the period of am I right can create the anxiety that's going to bring you towards this void, this hole. And what I would like to introduce to you, if you haven't seen it before, is the mannerism in which I trade, and that is to work from the notion that the future already exists energetically, because it does, knowing that the gravity pull of the future is pulling price towards it, instead of that archaic style of financial charting thinking that the market is pushing itself forward. So here's the difference in that. A lot of traders think the market is pushing itself forward, whereas the way I see it, the market is pulling energy towards itself. All right. So after a turning point is formed, I see that the market is being pulled towards the next gravity point. All right. And the next gravity point for me is where the turning point happens. So with markets, I think of a pull instead of a push. All right. And this has significantly helped me with my anxiety, as when the price action moves forward, it has to go up and down to fulfill its own sacred geometrical shapes. And knowing that, I can relax into the fact that it's going to land up to the gravitational pull, but it's just on its way, on its journey there. All right, so what am I talking about over here? As you can tell, if I put on my focus mode, we've got these boxes. Will provide non-probability, which leaves us with our area of highest probability. All right, so I said the market was going to go down. It went down further than anticipated, but that's awesome. All right, so that's okay. Being right in terms of up or down is 90% of the game won. The rest is just filling in the nuances. All right, so say for example, we go to our protractor and we have this. I'm not sure if you can see it too well. Well, we'll just try, especially the guys on their cell phones, it might be a little bit difficult, but I can see it very clearly, so hopefully you can as well. So by putting this protractor down over here, I can tell that the price action is moving towards where this gravity point is going to be. So what I mean by that is, if I go back here, I can see price has gone up to that point. It went down, pulled itself back up to where it intersects there, traveled along a little to get to this point where it dropped, and then it started declining along this line. All right, so that's what the protractor is there for. It stopped, pulled itself up in a curving way, and then started reclining against this line that goes down again. All right, so in this instance, this point over here is the gravity pull that's pulling price towards it, and it is fulfilling its journey by going up and down until it gets to the turning point. So that's the way I see the market, and I know it's very different to the rest of the world, because I've had to actually move away from their teaching and become self-taught to get onto this level of understanding, because before now it was a lot of rubbish being taught to me. And this is what I'm trying to encourage you to do, is to think about the market being pulled towards a gravity point or turning point instead of being pushed forward. All right, so the pushing mentality means that it feels like anything can happen next. It can go up, it can go down, it can dump, it can pump, it can go sideways, whatever. That's going to mess with you. If you see it as being pulled to the gravity point, then that's way better. The question then is, how do I get to that gravity point? Now that is to use the MTOPS system alongside your probability boxes to identify where price isn't going to go, to leave an area of where price is most likely going to turn at next. So in this instance, what I would do is, because we're looking at trend direction first and foremost, I will know that 1 is below 9, so this high is below that high. So therefore, I anticipate the next turning point to happen below the low. All right, so in a downtrend, lower highs create lower lows, and for that reason, I know that anything above the recent low is not going to necessarily happen. I'm just going to enter focus mode just to show you with the clarity. All right, so then all of a sudden that big screen goes into this more focused area. All right, now the price is here. does make it a bit more difficult to explain this, but imagine price was still back here. So if price was back here, this is where we would be doing this, right? So from a time perspective, I can see over here that my time projection and my cube root is closest over here. So these are the two that are looking as if price needs to go beyond there or form at that area. So anything before those two, I want to take off the board as an option. And then also just to neaten out the kind of a cordon in the time aspect from where it's unlikely to happen and too far in the future, I want to take away anything that's beyond this 150%. Okay, so that's going to leave us with this. All right, so the reason why this 150% and beyond is unlikely is because we're going from turning point 1, so this high, to turning point 2, which typically turning point 2 doesn't happen beyond the end of quadrant 1. So that's all MTOPS stuff that you guys should already know. Next, I would like to see what's going to happen with price projection. So in terms of price projection, I simply go to press X on my keyboard. That's going to bring out the protractor. And as you saw me point out earlier, I will have a look at where it connects or where it is not connecting and see whether or not this is going to be the highest point of turnaround. All right, so from that, I will then start moving this down. And if I want to be conservative, I'll just leave it at where price equals 1. All right. So even if you get into a position here and you write all of that profit down and you close that price equals 1, that one over there, then you're making so much profit as is. Like you don't need more than that in your trade day. It's just by going to the lower frames, you have more opportunities. But if you're just doing this one trade, you're good. Like that's $4,500, between $1,500 and $4,500 profit in that one trade waiting for you right there. All right, so that's okay. That's really good. Now, to close this in a little bit more, I see that the last intersection for support and resistance is over there, right? It's the only option that's in that white space. So for that reason, I want to bring in our probability box up to there and allow that to be my area of probability. Again, because there isn't necessarily a turning point happening back here, this would have been my assumptive turning point, and therefore probably eventually, after I saw price start to drop, narrow it down to this area. But conservatively, I could have left it up there, and that's still been good enough. Here now becomes my area of gravity. All right, so this gravity area is going to pull price towards it because of exactly what I've just done. And you can do the same thing too. You've got all the tools on the side there. All right, you had your correct scaling, turning point spacing. 2 is going to form within quadrant 1. Don't worry about the oscillator. We don't care about that too much. And then the the price projection, support and resistance, everything you've just heard me say has been considered in doing what we've just done. And I do this for all my charts every single day because I'll work from the market as being pulled somewhere instead of that emotional trauma and turmoil of it being pushed somewhere. All right, and this is really helping me succeed. So that is a solution towards waiting to see if you're all right. Okay, so another way in terms of how to behave when you have an open trade is to ensure that you're operating from a confirmed turning point. Now, the easiest way to tell if you're in confirmed turning point is if there is an oscillator that has switched. Now, unfortunately, with an oscillator, it's not the greatest tool. It's just like a help tool. And when it switches, it's no guarantee that that is the turning point. So that's where kill zone confirmation comes in. So this oscillator and kill zone confirmation combo will help you see that you have a confirmed turning point. If you don't know by now, guys, it's best to wait that out. Just wait it out. Just working from a confirmed spot. And I'm not talking even about money anymore. This is about the dark hole, about avoiding the dark side of trading. Just operating from a confirmed turning point is going to move you away from the temptation to fall into that realm of scarcity and lack and be caught into this delusion of being desperate or trying to make money back quick after walking into a loss, or whatever the dark side of gambling or trading actually does to people in their lives. So psychologically, and for the well-being of your family and your future, just follow the rules and work from a confirmed turning point, and trade and trend, and be purposefully patient, which our tools are providing you the ability to be so. Okay, I have some more points that are still related to time, but I'll fly through that. I suppose when working from the mentality I'm talking about, in terms of seeing that prices being pulled somewhere, you'll come to the realization, especially when using our tools with the protractor or the reverse GANs, that it needs to fulfill the reverse GANs. All right, so as the GAN tool going forward has its arcs, if you reverse that, it'll have those arcs as well. So whilst it's traveling to its new gravity point or turning point, it needs to fulfill that pattern. All right, and we use that pattern to hone in where the gravity is, so it's good for us. But because it's doing that good gesture for us, many traders think that the open position is running into a loss. And that's super, super dangerous, because you'll close the trade and then not have your stop loss set. You'll just manually close the trade, or worse, you'll bring the stop loss to where your price is and get too kind of not scarce. You're mistrusting. So you'll be so mistrusting that that the price will come up, it will take the stop loss and then continue and go in the direction in which you had the position in towards. What I'm talking about is the realization that price is going to move in line with these arcs. All right, it's going to go in line with the shape of the reverse GAN so that it gets to its gravity point. Don't be freaked out by that. In fact, be grateful for it, because when you're using the MTOPS rules, you know where to set your stop loss, and anything underneath or away from that stop loss is fair game. And because you got the correct position sizing, and because you're following the risk management taught at MTOPS, you're bulletproof. All right. And if things go wrong every once in a while, the market likes to change its mind or whatever the case is. I'll talk about that in a second, and that's okay as well. But overall, just general trading, the market needs to fulfill its shape in the obligation that it has to the reverse GAN as it gets to its gravity point. So I'm not going to repeat that again. I've said it enough times for hopefully that really anchoring in, because that could be a massive move towards your current results and then into the mega results that you deserve. Regarding going back to time, it can really rattle you, because questions such as why is it taking so long will throw you around. And why markets take so long is because each time frame has got its own obligations, and if it's in a bad point within its cycle, especially so if a higher frame is in a kind of a bad point where the price is still close to the turning point or the gravity point, by default that gravitational pull on price action is strongest at its turning point. So whilst that is fulfilling its obligation, the lower time frames suffer. All right, so if you're an MTOPS student for a while, this will make perfect sense. If not, just be patient with yourself. You're moving towards this, the understanding of this. So if it's close to a kill zone on the 2048, the others are going to feel the pain of that, all right? And the thoughts that come in though in the real world is Like I started to get angry with other players in the past. Like I started to get angry with countries and markets and people, and I was like, well, you know, we're now in the Australian time zone. Why isn't Australia placing any orders on this? Why is no one in Australia buying Bitcoin? Or now we're in India. Why isn't India buying Bitcoin right now? Or, you know, I work through like the different time zones as the world would wake up, or whatever the case may be, and get into this realm of irrational thinking where I'm starting to take the markets personally, where they're not personally. The markets react on energy. People are just the worker ants that fulfill the numbers, all right? I know this to be true because in dealing with the Dow Jones, and even though there are closed bulls and closed periods of time where there's no active orders available, the MTOPS and sacred geometrical shapes that we have discovered here in the market, the MTOPS rules, the MTOPS shapes still get fulfilled as if the markets were trading. So the worker ants, us humans, or the high frequency bots, or whatever's going on in the order books, fulfill the shapes, okay? And even big news or everything is explained through sacred geometrical shapes in the market, of course at MTOPS. Whether or not a person is doing it, or a news release, or bots, or AI, or whatever the case may be, the markets still fulfill their obligations. This means you can take away the personal element of trading out of it and realize that you're working with energy, and you can't take energy personal. It's just about being smart as to where to trade within that energy. And again, if you're trading back here where price is in kill zone, then of course you're going to feel anxiety. But if you come to the understanding that in the higher frames, it's going through its own moving away from the beginning bits of a turning point, then you'll realize that the trading that you are now doing is in fact high risk, because you're putting in money towards unfavorable market conditions. So by identifying the bad spots on the higher frames, being smart enough to realize that there's low activity there, you will avoid bad habits or this gambling mentality or this addiction to getting into a trade just for the sake of having a trade, or also being able to use that information to help plan your trading so that you don't run into this delusion of time scarcity as well as deadlines. So if you're a prop firm trader like I am, you get a certain amount of time to do a certain amount of things. So over 30 days, you get to increase an account by 10%, and then you work towards that. Now, if you were away for the first half of the month or whatever the reason, and the amount of time, or the market's required for most of the month, and the amount of time that you have to make that 10% on account is getting less and less and less, there is this deadline that's hanging over you where it's almost impossible to kind of see through it and remain. So a lot of guys will try and place good trades, but just during bad market conditions. And that is like trying to start up a McLaren or a Ferrari or a sports car whilst there's no oil and fuel in it. The car is there, but there's no fuel in it. And it's the same thing with price being in bad spots on the market, which quite frankly it often is, and trying to just ignite what isn't there. Like, for example, the guys in Africa or Europe or in London, Australia as well, trading the Dow Jones whilst there is an American bank holiday is trying to start a sports car without there being any fuel inside of it. It just doesn't make any sense. So by identifying where price is in its own obligation, sacred geometrical setup on the higher frames, you'll be able to avoid slow moving price action, low orders on the books, and the psychological warfare of what one needs to go through when price is just bobbing along really slowly and it's neither going towards your stop loss really or towards your target, and just waiting that out, especially using leverage and working with prop firm money and deadlines, that kind of stuff, and with the existence of fatigue and potential prior losses that you're trying to make up for, is like this deathly rattle that I recommend you stay away from as well. I've got your stupidity on the market is something that can also bring you into a state of getting into like your own trap sort of thing. And this, I'm going to start moving forward now because it's been a long video as it is. This over here, for example, is just a stupid move. All right, it just goes bang, one big shot like that. All right, that's a stupid move. Another version of, I should say silly, but when it comes to markets, I'm a bit more punctual. Another stupid move, if I may say so, is here with Bitcoin as well. All right, see that, and within a few days, like 1 week, it just goes bang, and it just keeps running, keeps running, keeps running. That for me is ridiculous, right? On the 2048, you've heard me say many times, it was just quiet and quiet and quiet. So it's 2 months of nothing and then condensed into 1 week. So that's just dumb. So how to avoid stupid moves like that's happening in the marketplace, or this one over here on the Dow Jones, is again, not to get in your own way. Put your stop loss behind previous turning points, get in after the kill zone has been exited, and then forget about it. And then whatever needs to happen within this market environment, if it's dumb, if it's whatever, like just allow it to be. All right, just follow the MTOPS rules, turning point spacing, time projection, all the stuff you already know, and allow price to do its thing within that environment. To put it differently, you're not in control of what happens inside here. So forget about it. There's a song that I like that says, relax, because nothing is under control. And you have absolutely no say in what happens within these transition areas. If you don't know what a transition area is, it's that area over here. So don't try and control it. The things you can control is follow the rules. Set your stop loss over here. Keep a reasonable target. If you need targets, the system itself will provide it for you. Okay, so there we are. Moderate is 33975. I mean 33. There it is. 33975. Bang. Done. System's done the work for you. You're good. All right. What else has this achieved? It's moved away from this potential realm of pain where you're getting into this trap of self-doubt, fear, and uncertainty. Then after that, trying to throw good money at bad, trade in market conditions that shouldn't be traded in, and it just gets worse and worse. And just to revisit what I mentioned to you earlier, it's invisible around your family. It's invisible around your friends. Like maybe your moods get irritable, but people get irritable in life. So if you develop a problem, seek help. And it's not a joke. Like it sounds weak to seek help, but if you're on this losing streak and you're self-sabotaging and you can't get out of your own way, you got to start considering seeking help, because it could become a silent killer along the like years down the line. Now, that's doom and gloom stuff, but I'd rather you be aware of it up front. Let me just figure out what else I can end this conversation with, and yeah, so another thing that's going to throw you around is the fake outs and the slide outs, but I suppose I can do another video on that because that's more technical analysis that you can overcome with confirmations in the market, and you can use our system for that. But to surmise what we've been talking about, please be aware that markets are a vehicle in which, if used incorrectly, could open up a pathway towards addiction, and if not managed properly, could be destructive down the line. All right, and how you curb this is to not take the rules lightly, follow the damn rules. And how you can stay away from this environment is start being responsible for your actions, in that you can create a like a checklist or a sheet of rules of your own to work against any of the things that are getting you tripped up on. So if, for example, you open up a trade and the trade doesn't go well and you close it for a loss, and now you're on your back foot, and then you're seeing yourself open up quick wins or more trades which are just out of hope rather than following the rules, then create a rule like that you're only allowed to trade once per turning point. Okay? Or if you've run into a loss, and this can happen, by the way, after 9 wins. So you can have 9 wins and the 10th one being a loss. So if you come into that loss, then you just close your laptop screen and walk away for an hour. Do something that works for you like that. I can't have a golden key or a broad brush fix all for every single person, but find something to help you avoid the negative. And you'll see that your account and your life will thank you for it in the weeks and months to come. Please go back to this video, even after watching it to its completion, at a later point in your trade journey, because it will help you get you back in line towards your winning streak. This can happen again when you're on your back foot after a few losses, or if you're just feeling down and out because something in life has happened and you're going through something emotionally. This could be that guidance that pushes you through it. If it's not that, this video can also be used as a warning, as a kind of a preamble to the dark side of trading, and see whether or not trading is for you. If you don't have the mental strength and emotional strength to move past these environments, which can be done just by following the MTOPS rules, then perhaps protect your capital and put it into something that you know and grow a business that way, whatever the case may be. Well, so I want to say goodbye for now. Thanks so much for listening up until this point, and I truly hope this has added value towards your trading career. All right, ciao for now.